A very good morning on behalf of India FinTech Forum. I am Aditya Kothari and I have Dr. Jasmin Gupta, who is the CEO and co-founder of LXME. Jasmin is a distinguished professional with expertise in various fields, including banking, fintech, and digital banking. She has won numerous awards, such as India's Aspiring Leader Award and Global FinTech Excellence in Leadership Award. With an MBA and PhD in financial inclusion and digitalization, she is a TEDx speaker, author, visiting faculty at prestigious institutes. Jasmin has represented India globally, held leadership positions in several organizations. A very warm welcome to FinTech Leadership Series.
Thank you so much, Aditya, for the introduction. Thank you.
Coming to my first question, please share with us your professional journey and how you developed an interest in the fintech industry. We would be interested in hearing about your experiences in this field, as well as your perspective on the opportunities and challenges it presents.
Okay. It's a very interesting story. I would definitely like to share it with you, and I hope you like listening to it. So banking and finance happened for me with a summer internship in Reserve Bank of India. Long time back. And of course, that was a project that I did on risk management, but opened up the entire world of banking for me. And then when we had the campus recruitments, I think HDFC Bank was the first bank to come to our campus. And that's how I got into HDFC Bank and started my career. Started my career as a personal banker. And I think the journey was very rewarding. HDFC Bank was growing fast. I was growing fast with the bank. I still remember at the age of 25, 26, I was the youngest branch manager in the country. Wow. And it was very aspirational for the younger generation that, private banks are the place where you can definitely grow fast if you perform well. So I was the, number one relationship manager. So we used to have relationship manager scorecards. So I used to be all India number one. And I think it was very competitive and very dynamic. And I think that thrill, that competitiveness, that's something I thoroughly enjoyed. And we had competitions. So I travel all across the world, winning the competitions, Australia, Switzerland, wow. And I think I saw the entire world winning contests in HDFC and then subsequently Kotak Mahindra Bank as well. I think Kotak was a turning point in the career wherein, while I was great at business and numbers, I also got an opportunity to explore different roles in head office. So I was in Mumbai for a very long time. And because I changed a lot of roles, and I think I was not satisfied with just one line, ladder, I would say, wherein, you were doing the same thing in and out year on year, and you're moving up the ladder was something not for me, maybe. And I wanted to explore different things. And that's how I think my ladder has been like this, wherein, it's been different turns, different profiles, different roles. I moved into digital banking. I drove digital adoption. I did learning and development. I did product management. Again, I did business management. So I think the entire plethora of roles that I explored actually gave me a 360-degree view of what the banking industry is all about. And coming to your question, Equitas Bank was when I got into the fintech space. So while I was heading digital banking at Equitas, neobanking emerged during the same time when COVID hit India. So around 2020, 2021, I think it's neobanking, of course, is a phenomenon which is known worldwide since 2015, but in India, it was very new in 2021. And I launched the first and the fastest growing neobank in the country, which is NeoX in, I think, 21. And then subsequently FreeOSave. And I think the entire neobanking model, we never had a neobanking department in the bank, but we created it because the opportunity was so large that we actually created a department wherein we wanted to get into fintech partnerships. We also had a FinTech accelerator. So I launched a FinTech accelerator where we had the best of the mentors, the best of the industry experts on board. And we had 125 fintechs who applied for the program.
Wow.
So, I mean, it was huge response. And I think we felt that, the time was ready for the fintech industry and the banking industry to come closer and work together. And that's how I got onto the fintech bandwagon, I would say. And when I got the right opportunity, of course, I moved from banking to fintech and LXME, as I think we'll talk more about it later.
That's quite an interesting story.
Yes, so I think there are a lot of opportunities now, whether you are in banking or whether you are in fintech. The opportunities are immense in terms of collaboration, in terms of newer solutions that you can bring to the market, because now with COVID, I think there is no turning back. People have become digital savvy. So the entire digital revolution, I would say, that has taken place is going to make the entire older version or the older traditional business models redundant. And then the newer emerging business models are, of course, really interesting. And let's talk about it more.
Yeah. The Indian economy has been positively impacted by digitalization and technological advancement. We can observe transformation in every sector. Products and solutions built on the back of this advancement have changed the expectations of the people. In this advancement, what is the future of neobanking in India?
Okay, so let's first take a global tour of neobanking. It started in UK with Revolut, Monzo being amongst the top neobanks, the first neobanks that came up in UK around 2015-16. Then it spread to Germany. I think N26 was one of the fastest growing neobanks in Germany. Again, it spread to China, US, Chime. I think a lot of these neobanks came up. Now, the models that existed in Singapore or UK were very different than the models that were emerging in China or maybe in India, as we see now.
Yeah, right.
Right. So, for example, in many countries where we see that the digital banks have their own licenses that they have received from the regulator, the Indian scenario is a very different scenario where digital banks don't have a digital only license. That's a model which has not emerged. Of course, if we look at the history of the banking industry, from public sector banks, we moved to private sector banks. From private sector banks, we had the small finance banks and the payment banks coming in. So smaller, microfinance companies got converted into small finance banks. And now the payment banks are, of course, very close to the digital models. However, we don't have a digital only bank. So the neobanking industry, which started in India, needed to ride on a license of a regulated bank. And I think that's how so for example, when I launched NeoX, it was riding on a license of a bank, of a small finance bank, right? Now, the customer experience, the customer interface, everything is different for a neobank. And I think neobanks are important for the entire ecosystem because what they can do for the customer is something that traditional banks cannot do. I mean, just an example. Neobanks are very target segment specific, and they focus on a niche area which have been left out by the traditional banks. The traditional banks have a paintbrush approach. They want to be a banker for everyone, and rightly so, right? So they will have a senior citizen account, they will have normal savings account, they will have a silk savings account. I mean, just an example, Mahila account or a silk account, wherein they will try to meet the demands of all these categories, and they will have different types of accounts. They will have current accounts, they will have 5, 10 different variations of current accounts for SMEs, for micro finance, for smaller proprietorships, etc. Neobanks, because they are catering to a specific segment, they go deeper into a customer first approach. So their approach is very different. While the traditional banks have a products first approach, the neobanks come with a customer first approach. And because the customer is at the center of the innovation, I think the products that neobanks are able to curate along with the traditional banks, because of course they need a license, are highly specialized for a particular segment, which can be an MSME segment, which can be a women's segment, which can be a factory worker segment, which can be a fisherman segment, which can be a millennial segment, a salaried segment. It could be any of these niche segments. So fintechs focused on these niche segments definitely give a superlative customer experience, which are usually not offered by the traditional banks, and that's where they have an edge. Of course, they have the edge because of the technology. They have the edge because of the agility that they bring to the table and the speed with which they can go to the market, and the fact that they are catering to a specific customer segment. I think they are very much essential to financial inclusion in the country, because there are segments in our country which is as diverse as India, which have remained excluded since ages, I think. So all of these segments definitely need curated products, which I think that need can be met through neobanking. And I think the entire partnership model that exists as of now is also good enough to make it work for India.
That's great. The banking sector is at a turning point. Banks have pushed for great improvements recently. Margins are shrinking down more than 25% in the last 15 years and expected to fall 30%, another 20% decrease in the next decade. We believe that the skeptics are right about today and wrong about tomorrow. Banking is facing a future marked by fundamental restructuring. But we also believe that banks that successfully manage this transaction will become bigger and more profitable and grow faster, while leading to a value creation opportunity up to $20 trillion. What is your opinion in this?
Yes, I think banking, which happened last 5 years back, is not something that's going to happen in the next 5 years or 10 years.
Yeah.
See, we've already seen cases wherein in US, for example, we've seen the entire branch banking model turning around, people closing down branches, right?
Yeah.
In India also, of course, not so soon, but in the next 10 years, we will definitely see the entire banking models changing, the way banking happens changing. So from a capital intensive branch banking model, wherein, if you set up a branch, there is a capital cost involved. And to break even a branch takes at least 3 to 5 years. Yeah. And the physical channels who source customers, the cost of acquisition of a customer is nothing less than 3,500 or 4,000 rupees. As compared to that, the digital models which are emerging have a customer acquisition cost of, say, 500 rupees, right? And without that capital cost or an investment of branch banking and paying the rent and getting all the people, getting entire setup done. So it's completely capital intensive. Now, I'm sure millennials, you and me don't even go to the branches, right?
Yeah.
So going forward, the next generation, Gen Z, they are not even going to step into the branches because everything is available on mobile banking, net banking. There's no need for them to go to the branches, right? So the digital models that will come up, I think, going forward, banking is not going to be branch banking in the next 10 years as I envisage. And because the model will change, I think challenger banking models, neobanks within the traditional bank models. These are also different digital banking models which are emerging. Like, for example, the 811, which is nothing but a neobank within a Kotak Mahindra Bank.
Yeah, right.
Right?
Yes.
So these are also challenger banks. And again, 811 is competing with the entire branch banking channel. Why not so? Right. And we see the difference. We have seen the difference, the fintech partnerships of banks opening 2 lakhs account, 5 lakhs account per month, while the branch banking channel is opening 25,000, 50,000 accounts per month. So
Yeah.
there's a huge difference, not just in terms of cost of acquisition, but also in terms of the speed and the number of people and the reach. Today, with the digital models, the newly emerged banks like the small finance banks or the payments banks, they don't need to make those intensive investments, but still reach, can have the geographical reach, can have the demographic reach, and reach the customer, which was impossible for them to reach otherwise through the old setup, right? So I think next 5-10 years, we will see a complete change from a branch banking model to a hybrid model or maybe a digital only model. But I think that's the way forward very clearly as we see it.
That's said to happen. How can financial institutions leverage data analytics and machine learning to develop more targeted and effective financial products and services for women, particularly those in low income and unserved community?
Okay, so I think it's not just women. It's about all the various personas that we deal with. I think analytics can make a difference. Of course, every target segment will have a different need and will require customization of products. And that's where I think data is the key, because analytics or machine learning can work only if there is rich data. So we'll obviously see how the account aggregators play out once we have that data pool also available. But having said that, I think banks are rich with data, because when customers do a lot of transactions, they leave behind a lot of data. And I think that is important, and that actually enables them to curate offers. Now, for example, even that I think will be a next step forward when we have the account aggregators, because for a particular bank, say for example, Aditya, you have a bank account in Kotak Bank, you have a bank account in HDFC Bank, you have a bank account in Equitas. Now, you may have one primary account. All of them are not going to be your primary accounts, right?
Right.
So, for example, a Kotak Bank is your primary account. And say, for example, HDFC is a secondary account, but HDFC feels that Aditya is doing, his entire world is what he's doing in that HDFC account. Then the offers that come out through using analytics only through what you are doing in your HDFC account is not going to be extremely accurate. So I think once the account aggregator comes into play, I think it will be very different, because then what Aditya is doing across banks, across various financial institutions is at one place. And I think then that data will be much richer than what all banks have their own separate pool of data. But as you wanted to know more about women, while banks have, of course, limited data, it's not limited to women. I mean, they have the same data for their proprietor accounts, or they have the same data for their teenager accounts, or for their kids accounts, or for the women accounts, right? Neobanks have an edge there, where I would definitely want to share that neobanks, because they are offering banking along with an experience which is beyond banking experience. Say, for example, there is a community of women. I'm sure you've heard of Shiros, even Lakshmi has a community. So when there is a community of women, there are a lot of activities that women do, which is beyond financial, which is beyond just banking. There are a lot of questions that they ask. There are a lot of learnings that happen. There is a peer-to-peer discussion that happens. All of this is also data, right? And converting all of this data using analytics, machine learning, and then curating and giving them customized products is one step forward, which I think neobanks definitely fill that gap and take that step forward as compared to the traditional banking offerings.
How can fintechs effectively navigate cultural and social barriers to financial inclusion for women, particularly in developing countries where gender inequality is more pronounced?
Yes. And I think we have seen this in India. See, we talk to a lot of women. Lakshmi is a community of women. We have most of the customers who are women. And when we talk to them, I think India as a society is still, I mean, there's a lot that still needs to be done to get gender equity or gender equality in place. Right. So women are still not confident enough of making their own financial decisions. Most of the women drop off from jobs, businesses, for family reasons. Many a times we have seen that even working women are not ready to take on the additional responsibility of managing their finances, even if they are earning. So whether they are earning or whether they are not earning, of course, there's a society and cultural issue that needs to be solved. And hence, we say that we have a 4E approach at Lakshmi, where, because there is this socio-cultural gap that exists when we talk about a particular target segment. The first step that we need to do is educate the customer. Yeah, so education is the first E that we say. First, let us make them financially literate. Anyways, the financial literacy rate, if you see the figures, 27%, 28% is very, very low in India.
Yeah, right.
Compared to that, women are, of course, extremely, extremely bad, right? So bringing them up the curve in terms of educating them about their rights, educating them about the money matters, educating them about how to be financially independent and manage their finances is the first step, I think. The second is to make the things very easy for them. The product so easy, the journey so easy for them that it is, of course, a do-it-yourself journey because it's a digital world. And you'll be surprised to know, Aditya, 60 million women in India are digital savvy, means they are using some of the other digital payment methods here, there, Myntra pe shopping kiya, Big Basket pe kuch liya. So they are doing some of the other things. It's not that they are not digitally literate. They are digital savvy, but they are not financial savvy.
We're talking about urban
Women. I'm talking about urban women. See, even urban women are financially excluded. So when we talk of financial inclusion for women, I think tier 1 or tier 4 doesn't matter, because even in tier 1,
right.
the exclusion rates are as bad as, as same as the tier 4, right?
Yeah.
So the products need to be very simple, easy, do it yourself, so that they can easily adapt to it. Of course, with women as a segment, what we have also observed is that digital channels work better rather than just digital channels. And I will tell you the difference in the customer acquisition as well. Men usually search for digital savings account. Women don't even search for something like this. Okay. So when we use all the digital marketing tools to get, the right customer in, women are never ever the customer who will come in because they are not even searching.
Right.
So making the products very easy for them, which appeals to them, which they can learn and, try it out. So that is most important. So we have portfolios. Now, 2,500 mutual fund schemes, no woman would be able to understand, right? So we curate the products, we make smaller baskets, we have a child education fund, emergency fund. I think it makes it very easy for them. Okay, this is my goal. This is where I need to invest. They did not worry about, it is made of 5 different schemes, which I need to understand what is the NAV and everything. They don't need to get into the nitty-gritties. So making it simple, making it small ticket, like start with 100 rupees, makes it easy for them to start small and then build up as they gain their confidence. Yeah, so that's the second thing, easy products. The third is engagement. The engagement that we do on the community, of course, is very, very important because motivation is very low,
Yeah.
Men are slow to come on financial platforms. If you look at all the generic platforms, the Grow and the Zerodhas of the world, the women penetration, you will see 20%, not more than that. They don't want to be on the platforms and they are very slow to come on the platforms. And if they are not engaged on the platform on a daily basis, there are extremely high chances that they will leave the platform also as soon as possible. Yeah, so the engagement level through the community activities, I think that's most important. And the fourth, we say the emotional connect, because as a segment, uh, you can't just talk business with women without the emotional aspect. Because when it comes to finance, also women bring a lot of emotionality into it.
Yeah,
They
right.
want to save for their kids' education. They want to do something for family first goals rather than their own goals. So we had done a survey, Women and Money Power survey, which clearly showed us that family, child education, these are their priorities, their own security, they're starting their own business, planning for their own retirement. These are like 2 to 3% women wanted to do something for themselves.
Oh, God.
So the motivations are very different. So I think that emotional connect is also very important. And this is where I feel that, whether it is tier one customer or a tier four customer, I think what matters to them is how you offer the platform to them, how you are able to connect to them. And I think that's the gap that neobanks do fill in, because a bank like an HDFC bank will not have the bandwidth to go so much deep into a segment to figure out, their very specific needs. I'm sure they are doing whatever they are doing is best, but the gap that still exists when we talk of financial inclusion for certain segments, I think neobanks are very well placed to fill those gaps.
Right. What are the key drivers of profitability in digital banking business models? And how do you differ from traditional banking models? In particularly, what are the implications of lower transaction costs and higher customer acquisition costs for digital banks?
So I think in digital banks, the cost of acquisition is comparatively lower. As I just mentioned, I think earlier, normally through physical channels, the cost is 4,000 rupees. For a digital channel, the cost is 500 rupees. Of course, there is a difference in terms of when you acquire a customer physically, there's a lot of selection that goes into getting the right customer in terms of digital. Of course, you get all the kinds of customers, so of course you have to live with that as well. uh, Having said that, because the capital costs are low, um, the digital models are of course extremely cost effective.
Right.
And because the transaction costs, see, ultimately profitability comes through not just one product or one service that a customer will use with you. A digital customer, maybe you may have acquired as a savings account customer who did your 5 minute ka journey, did your video KYC, got entered and put in 5,000 or 10,000 rupees to start his or her banking. Okay, that could be the first product. But with just one product, you cannot achieve a profitability at all. So
Yes.
usually the profitability game of any bank or any financial institution is also to ensure that there is a lot of cross-sell, upsell, and a lot of relevant products also offered to the customer. So the customer who is a savings account customer, can he be offered a demat and mutual funds? Can he be offered credit cards, debit cards? Can he be offered, insurance, mutual funds, the third-party products, as we say? Can he be offered personal loans, education loans, home loans, etc.? So I think the profitability models, whether it is a digital model or a physical model, will remain the same. However, the speed at which the costs are, of course, low, and the speed at which the sales happen, I think that definitely is better when it comes to digital models, because again, so both are very different games, Aditya. When it comes to digital, I think the kind of products that you offer digitally are very different than the kind of products that you also offer physically. So, for example, sachet insurance goes very well with digital products. You can embed sachet insurance, sachet general insurance, health insurance along with your banking products and offer it as a bundled product digitally.
Right.
While physically, you would definitely want to offer a ULIP product, something which is complicated and requires a human intervention to make the customer understand. So I think there are pluses and minuses in both the models. Both the models need to coexist. For any banking or a large financial institution, I think the digital game and the physical game both are important. How they can be merged, how they can be made competitive in such a way that they compete with each other at the same time, you get the best of the both the worlds is what I think will ultimately help any bank to be a winner in both the worlds.
Right. You have an experience of nearly 2 decades in the finance and fintech industry, and you have been recognized by numerous highly prestigious awards. What guidance would you like to give to the upcoming entrepreneurs and youth?
I think everybody after the Shark Tank that we are seeing in last 1 or 2 years, everybody wants to start up.
Right.
So I think it's great to start up if you have a great idea, if you think you can make a difference to a particular society, if there is a larger purpose, a larger meaning, please definitely go and start up. At the same time, I would definitely advise that before you start up, there is nothing wrong in going and getting experience in a larger setup, in a larger organization. The reason is there's a lot of management skills. There are a lot of professional skills that you learn in a professional setup, which the first time founders definitely don't know. And this is a very sad, I would say, this is the worst part of the entire startup ecosystem that I have observed, wherein I've seen new age founders without the management skills. They may be great at tech. They may be great at one aspect of the business, but because they don't have a 360-degree view of business management, a lot of unprofessional things happen in startups, which can be avoided if the founders first take a few years of experience in established organizations. I think it will make them great founders. Yeah. And I think Radhika Gupta in her latest post sometime back also mentioned that it's not necessary that everybody needs to be an entrepreneur and everybody needs to start up. Larger organizations also need people, senior people to run the organizations, right? So just because you are seeing Shark Tank does not mean jump onto it and start your startup because it's so easy to start up. It may be easy to start up, but it's not easy to sustain that startup. I think the success ratio in startup is 2 to 3%.
Right.
The rest of the startups are failing, of course, right?
Yeah.
So the success rate is so low. And the reason behind that is because most of the founders with not having the right kind of experience make a lot of mistakes, which could have been avoided with a good amount of experience, I think, in professional organizations. That's what I would want to share.
I'm sure the audience will definitely benefit from your advice. I thank Dr. Jasmin Gupta, CEO and co-founder of LXME, to share a valuable insights with us and a professional journey. Have a great day ahead.
Thank you so much, Aditya. Thank you, India FinTech Forum. Thank you.